May 7, 2023. Unit 14. Escrow and Title Insurance. Abstract of Title. Amendments to the Escrow Instructions. American Land Title Association, ALTA. Closing. Elder Abuse Law. Escrows. Escrow Instructions. Extended Coverage Policy of Title Insurance. Interpleader Action. Opinions of Title. Preliminary Title Report. Rebate Law. Relation Back Doctrine. Standard Policy of Title Insurance. Title Insurance. Title Plant. Uniform Vendor and Purchaser Risk Act. Abstract of Title, a document that provides a summary of the recorded history of a piece of property, including all previous owners, mortgages, liens, and other encumbrances. Amendments to the escrow instructions. Changes made to the original escrow instructions, which are typically agreed upon by the buyer, seller, and lender to govern the escrow process. Amendments can be made for a variety of reasons, such as changes to the purchase price, closing date, or contingencies. American Land Title Association, ALTA, a national trade association representing the title insurance industry. The ALTA sets standards and best practices for the industry, and provides educational and advocacy resources for its members. Closing, the final stage of a real estate transaction, in which the buyer and seller sign all necessary documents and the sale is completed. At closing, the buyer typically pays the remaining balance of the purchase price, and the seller transfers ownership of the property to the buyer. Elder Abuse Law. Laws that protect seniors from financial exploitation, physical abuse, neglect, or abandonment by caregivers, family members, or others. In the context of real estate, elder abuse laws may be used to address cases where seniors are pressured or coerced into selling their homes or making other real estate transactions against their will. Escrows, a process in which a neutral third party holds money or other assets on behalf of two or more parties until certain conditions are met. In real estate, escrow is typically used to hold the buyer's earnest money deposit and other funds until the sale is completed, and to facilitate the transfer of ownership and payment of all parties involved. Escrow instructions, written instructions, signed by the buyer and seller, which outline the terms and conditions of the real estate transaction. The instructions typically include the purchase price, payment terms, contingency clauses, and instructions for the escrow agent to follow. Extended Coverage Policy of Title Insurance, a type of title insurance policy that provides additional coverage beyond what is included in a standard policy. Extended coverage policies typically protect against certain types of defects in the title that may arise after the policy is issued, such as forgeries or undisclosed errors. Interpleader action, a legal proceeding in which a third party, such as an escrow agent, can deposit funds or property that is being disputed by two or more parties. The court will determine the rightful owner of the property or funds and distribute them accordingly. Opinions of title, a legal opinion prepared by an attorney or title company that provides an assessment of the ownership and legal status of a property. The opinion may include information about any liens, encumbrances, or title defects that may impact the transfer of ownership. Preliminary Title Report, a document prepared by a title company that provides a summary of the ownership and legal status of a property. The report typically includes information about the current owner, any liens or encumbrances, and a legal description of the property. Rebate Law, laws that regulate the payment of rebates or discounts by real estate agents or brokers. In some states, real estate agents are allowed to offer rebates to their clients, while in other states such practices are prohibited or restricted. Relation Back Doctrine, the principle that holds that a real estate transaction is deemed to have occurred as of the date that the transaction was first agreed upon, even if the transaction is not recorded until a later date. Standard Policy of Title Insurance, a type of title insurance policy that provides coverage for certain types of title defects, such as forgeries, undiscovered liens, and undisclosed heirs. Standard policies typically provide coverage up to the purchase price of the property. Title insurance, insurance that protects the owner or lender against losses that may arise from defects in the title of a property. Title insurance policies typically cover certain types of defects, such as forgeries, undiscovered liens, and undisclosed heirs. Title Plant, a database maintained by a title company that contains information about the ownership and legal status of properties within a particular area. Title plants are used to generate title reports and to assist in the preparation of title insurance policies. Uniform Vendor and Purchaser Risk Act, a law that governs the transfer of ownership of real estate. The act provides that the risk of loss or damage to a property passes from the seller to the buyer at the time of the closing of the sale, unless otherwise specified in the sales contract. Escrows in many states. Real estate settlements are conferences attended by buyers and sellers, their attorneys, the real estate agent, and sometimes the agent's attorney. At this closing, all documents are signed and monies are paid. In California, the closing process is simplified by using an independent depository to handle the closing process. Escrows are neutral third-party depositories that are limited in authority to the instructions given by the principals. Escrow as follows. A grant deed may be deposited by the grantor with a third person to be delivered on the performance of a condition, and on delivery by the depository, it will take effect. While in the possession of the third person, and subject to condition, it is called an escrow. The widely used CAR form California Purchase Agreement and Joint Escrow Instructions makes the escrow instructions part of the purchase agreement, so separate escrow instructions are not required. Any changes in the escrow instructions, amendments to the escrow instructions, should be signed by both buyer and seller. Prohibitions. Licensed escrows are prohibited from paying referral fees to anyone except for the normal employee compensation. Title insurance. An abstract of title is a history of title showing every recorded document. Homeowner standard policy coverage. California Land Title Association (CLDA). The Homeowner Standard Policy of Title Insurance covers matters of record not specifically excluded from coverage, as well as matters not of record, such as a forgery, a lack of capacity of a grantor, undisclosed spousal interest. A grantor who claimed to have been single could have a spouse with community property interests, a failure of delivery of a prior deed, a federal estate tax liens, a deeds of a corporation whose charter has expired, and a deeds of an agent whose capacity has terminated. Standard policy exclusions not covered by a homeowner standard policy of title insurance are a defects known by the insured and not disclosed to the title insurer. Zoning. A special endorsement is available stating that property currently is zoned properly or that a current use is authorized by the zoning. Mining claims. These are filed in mining districts, and legal descriptions are not required. Taxes and assessments that are not yet liens. Easements and liens not a matter of public record, such as mechanics lien rights, rights of parties in possession, unrecorded deeds, options, leases, etc., and matters that would be disclosed by making inquiry of people on the property. Matters not of record that would be disclosed by checking the property, such as encroachment. Matters that would be revealed by a correct survey. Water rights and reservations in government patents. Homeowner extended coverage policies. Both the California Land Title Association, CLDA, and the American Land Title Association, ALTA, now offer extended coverage title policies for homeowners. Most California title insurers now issue extended policies to home buyers similar to lender extended coverage unless the purchaser requests the CLDA standard policy, which offers less coverage at a slightly lower premium. Lender extended coverage policy. Because many lenders are from other areas, the physical inspection necessary to protect their interests under a standard policy has not been feasible. Therefore, the American Land Title Association, ALTA, policy was developed to meet lender needs. Besides offering greater protection to the lenders, the extended coverage policy of title insurance allowed assignment because loans frequently are transferred between lenders. The lender's policy provides coverage only until the loan is paid. It actually offers decreasing coverage each year. In addition to the coverage offered by the standard policy, an ALTA extended coverage policy of title insurance includes unrecorded liens, off-record easements, rights of parties in physical possession, including tenants and buyers under unrecorded instruments, rights and claims that a correct survey or physical inspection of the land would show, mining claims, reservations in patents, water rights, and a lack of access. Unit Quiz 1. After escrow instructions have been signed, the escrow agent may A. Fill in blanks left by the parties. B. Return the deposit to the buyer if the escrow fails to close on time. C. Refuse to obey instructions received from the broker. D. Do none of these. Answer C. Refuse to obey instructions received from the broker. 2. If escrow instructions fail to provide for the date of possession, possession will be given A. Within 30 days of close of escrow. B. Within a reasonable time. C. At close of escrow. D. before close of escrow. Answer B. Within a reasonable time. 3. An amendment to the escrow instructions requires the agreement of A. the buyer and the escrow. B. the agent and the escrow. C. the buyer, seller, agent, and escrow. D. none of these. Answer D. None of these. Buyer and seller agent is not a party to escrow. 4. When the signed escrow instructions differ from the purchase agreement, A. the escrow takes precedence. B. the purchase agreement takes precedence. C. the contract becomes void for lack of certainty. D. the escrow is required to commence an interpleader action. Answer A. the escrow takes precedence because it is signed later. 5. Duties of an escrow do not include A. ordering preliminary title reports. B. mediating buyer-seller disputes. C. drafting deeds. D. issuing closing statements. Answer B. mediating buyer-seller disputes. 6. Exempt from the licensing requirements are escrows conducted by a real estate broker in transactions in which the broker represents either the buyer or the seller. B. title insurance companies. C. banks. D. all of these parties. Answer D. all of these parties. 7. A real estate broker, not licensed as an escrow, can conduct an escrow when the broker is A. a representative of the seller. B. a representative of the buyer. C. a principal to the transaction. D. any of these. Answer D. any of these. 8. Which actions of an escrow would be improper? A. accepting fees from both buyer and seller. B. refusing to pay a commission for referral to the escrow. C. refusing to handle an escrow. D. accepting escrow instructions with blanks to be filled in by the escrow after the instructions are signed. Answer D. accepting escrow instructions with blanks to be filled in by the escrow after the instructions are signed. 9. Which behavior is proper for a broker who, while not licensed as an escrow, conducts escrows on the broker's sales? A. delegating the escrow function to another. B. using the name Jones Realty and Escrow Company. C. charging for the escrow services. D. none of these. Answer C. charging for the escrow services. 10. A buyer given possession by the seller 1 week before close of escrow should be most concerned about A. the impound account. B. risk of loss. C. extended title coverage. D. designation of the escrow holder. Answer B. risk of loss. It generally passes with possession. 11. Which statement is true of the rights and obligations during escrow? A. the seller retains risk of property loss. B. rents belong to the seller. C. property expenses are the responsibility of the seller. D. all of these are true. Answer D. all of these are true. 12. Which would not terminate an escrow? A. full performance of escrow duties. B. mutual agreement of the parties. C. the broker's order to terminate. D. impossibility of performance. Answer C. the broker's order to terminate. 13. When both buyer and seller make demands on escrow for the buyer's deposit after the escrow failed to close, the escrow holder should A. deduct its fees and return the deposit to the person who made it. B. deduct its fees and return the deposit to the seller. C. file an interpleader action. D. give the deposit to the first party making a claim to it. Answer C. file an interpleader action. 14. Which best describes an abstract of title? A. the complete legal description. B. an abbreviated description, such as a street address. C. a recorded history of title. D. an opinion of title. Answer C. a recorded history of title. 15. Which is true regarding title insurance? A. executors and heirs are protected by the title insurance of the deceased insured. B. a buyer obtains greater title protection if the lender is issued an extended coverage policy. C. both of these are true. D. neither of these is true. Answer A. executors and heirs are protected by the title insurance of the deceased insured. 16. A title insurer will not be liable for a loss if A. its negligence was not the cause of the loss. B. the person suffering the loss was not the insured or the insured's estate or heirs. C. either of these occurred. D. neither of these occurred. Answer B. the person suffering the loss was not the insured or the insured's estate or heirs. 17. To issue a standard title policy, the insurer must A. provide a survey, B. Determine whether title is good. C. Provide an abstract. D. Do none of these. Answer D. Do none of these. 18. Which is true of the preliminary title report? A. It provides interim coverage. B. It shows the condition of title. C. It provides no insurance. D. Both B and C are true. Answer C. It provides no insurance. 19. A standard policy of title insurance protects against A. Rights of parties in possession. B. Unrecorded easements. C. Zoning restrictions. D. Forgery in the chain of title. Answer D. Forgery in the chain of title. 20. A standard policy of title insurance does not cover A. Unknown spousal interests. B. Rights of parties in possession. C. Forgery. D. Lack of capacity of the grantor. Answer B. Rights of parties in possession. 21. A standard policy of title insurance covers A. Unrecorded mechanics liens. B. Instruments outside the chain of title. C. Easements that are not a matter of public record. D. None of these. Answer D. None of these. 22. After buying a home and receiving a standard policy of title insurance, you determine that the tenant claims to be an owner under an unrecorded grant deed. Which statement is true? A. You are protected by your insurance. B. If you record first, you will be protected. C. You are not insured for this loss. D. An abstract would have given you greater protection. Answer C. You are not insured for this loss. 23. Extended coverage homeowners title insurance adds which element to the coverage of the standard policy? A. Forgery. B. Unknown spousal interests. C. Lack of capacity. D. Water rights. Answer D. Water rights. 24. Extended coverage policies of title insurance do not generally cover A. Claims of a party in possession. B. Building and zoning regulations. C. Prescriptive easements. D. Water rights. Answer B. Building and zoning regulations. 25. The rebate law prohibits A. Escrows from giving rebates to brokers. B. Title companies from giving rebates to brokers. C. Brokers from rebating commissions to buyers. D. Both A and B. Answer D. Both A and B.